Hi members and welcome to a Melbourne edition of Stock Trek. My name is Mitchell Sneddon and I'm joined by senior analysts Jon Mills and Alex Hughes. And today we're going to be getting into the subject of small caps. We've recently brought on Alex who specialises in investing in small caps, and it's a big interest of Jon's as well. So we're going to talk broadly about them. And firstly guys, I'd like to bring up something that comes up quite regularly when you're talking to people about small caps is the risk involved in them. Because we're going into smaller caps, does the risk increase?
Yes, I think it does. Generally speaking, if you invest in a smaller company, the average smaller company has higher risk than the average larger company. However, there are a lot of exceptions to that generalisation. And I think it's also important not to focus on risk and isolate risk. You also have to consider the return. And the small cap space is generally more inefficient than the larger cap space. So the prospect for pricing inefficiencies is greater. The prospect for higher returns is greater. So while you might be taking higher risk, you can be compensated for that through higher returns. So there are cases where a smaller cap investment could actually be lower risk than your conventional blue chip.
And speaking of risk versus return, recently we've seen the Small Ords index charge along quite considerably. Certainly outpaced the larger cap stocks out there. Is there still, have investors missed the boat here? Is there still some returns to come?
Yep, I think there's still returns to come. You have seen more investors take a bit of a fancy to the smaller cap space, and therefore valuations have increased, which suggests that it may be harder to find value. I think there's also an argument that because you've seen more investors come in, they've bid up some of the more liquid names. So perhaps in the more illiquid names there might still be opportunities, but generally we're stock pickers and we're looking to find opportunities in the pockets of the market. So the market may be higher, but I think there's still opportunities to find some bargains.
So there's still one or two opportunities out there, but perhaps it might be a bit harder right now, just as it's harder in the large cap end of the market to find opportunities there when prices have been bid up.
Yep, that's fair.
Now, looking at investing in a portfolio of small caps, you see a lot of fund managers out there who have dived into small caps, but when they do so, they tend to buy a lot of names. You can see some portfolios of 50 to 60 plus stocks in small caps. Is diversification more important or less important, or is it just a case-by-case basis?
I think it's the latter. I think it depends on what companies you're investing in and what sectors. Obviously, you don't want to have, regardless of whether you're investing in large caps or small caps, you don't want too much invested in a particular sector. But it's on a case-by-case basis. And there are lots of large cap only fund managers that have 50, 60, 80, 100 stocks in their portfolio. And I think once you get to that number of stocks in your portfolio, you're probably struggling to outperform just because of the number of stocks. I mean, if you want to get into the academic research, I forget the exact figures, but I think even 10 stocks in a portfolio, which we probably think is too concentrated for members, does get rid of most of the lack of diversification risk.
Okay, and Alex, I know you are a fair bit more concentrated in your personal approach to small caps. Yep. You're certainly not holding 50 plus stocks, is that correct?
Absolutely. For me, it comes down to your conviction in the investment, how cheap you think it is, and your ability to make the assessment of how cheap it is. And for me, I'm unable to find 50 cheap stocks. I would love if I could, but I can't. I'm much more willing to invest more in the names that I have more conviction in. And I find, investing in 10 to 15, perhaps 20 names is possible, and that's where I'd rather have more of my capital invested. So tend to be more concentrated than a diversified portfolio that you see in some other funds.
And it's also, sorry Mitch, it's also harder to properly analyse 50 companies. I mean, you probably need a pretty big team if you're the fund manager with a 50 stock portfolio. And even if you're an individual investor with 50 stocks, I mean, you probably don't know the 50 stocks as well as you would know 20 stocks or 15 stocks.
And there's less coverage in the small cap space, just full stop. Do you find it's easy enough to get out there and find out as much about these small caps as it is about the large caps that are covered by big chunks of the market?
It's probably harder, just because there is less coverage in terms of the brokerage community, less, big time or famous fund managers or investors in those stocks, and that's also the opportunity, because it's harder to find the information, it's hard to research them, and so those willing to put in the hard yards should hopefully come up with some good opportunities.
Yeah, and do you find management teams are more willing to speak with you in the small cap space? When you give the office a call, they're eager, they're jumping over themselves to get you in the office?
Yep, absolutely. I mean, in some cases you'll get a response from the CEO that afternoon, which for a larger company is virtually impossible. So yeah, I think they're much more willing to speak to you, which has its ups and downs, but it certainly helps to understand business models.
And when you're looking at these management teams, key man risk, how much does that come into play? I know, speaking with another small cap manager that I've talked with in the past, he actually specifically looks for that key man risk, wanting to have the CEO or the MD, have his money on the line and be the founder of the business and the driver of the business. He wants to see that. Is that something you guys really put importance in?
No, I'm not looking for key man risk. I'm looking for management teams that I have faith in and they've invested in the business that I can invest alongside. So I wouldn't search out key man risk per se, but you want to see a management team that you think can take the business forward.
Going on for that, a lot of people say they look for good management. It's like a broken record these days when you talk to analysts and when you talk to fund managers. How do you guys actually go out there and assess it? We recently did a stock trek on this, but let's, in a small cap sense, what are you guys looking for when you're talking to management? Are you looking, or how can you assess culture as well, a company's actual culture?
I mean, it's a very good question. I mean, the problem with speaking to management is management's going to tell you what they want you to hear, obviously, whether it's a small cap or a large cap. And so you've just got to try and read between the lines and maybe do the scuttlebutt, so talk to customers or talk to suppliers if you can. Maybe employees, former employees, maybe by LinkedIn. I mean, there's some of the ways that you can try and get an idea about management culture. Ultimately, you want the management to have a decent stake in the business because people are self-interested, and the more they have on the line, the more chance that they will do what's right for shareholders.
Because there is, say, less coverage of these small caps, do you guys find it's harder to get a good idea on earnings and forecasts? There might only be one or two other brokers out there covering it, or none, and there's not too many competitors, and they're fairly closely guarded as well, these management teams. Do you find it's harder to get a good feeling around that?
I think it can go both ways. When they have more concentrated business models, it's easier to identify the key drivers of earnings. Like if you consider BHP, which has operations all throughout the world, all different commodities, the drivers of earnings are diversified. But say, for example, a pure play gold producer, for example, the key variables are much smaller in number. So identifying what's important is easier. There's obviously less coverage, so then you have to do the legwork yourself, and in many cases, management communication is a lot less than what you'd see at larger companies that employ investor relations firms and that sort of thing. So it can go both ways, but that, as John said earlier, that can be the opportunity if you're willing to do the work.
Speaking of opportunity, when it comes to finding that margin of safety, do you find you're trading off quality for a cheap business?
I would say in most cases. I mean, again, we're generalising, but small caps by definition probably haven't been around as long as a larger business which has a dominant competitive position, such as a Seek or a car sales, and so you can justifiably pay a little bit more for those types of businesses. So I guess it all goes back to the margin of safety principle, and so yeah, you can get a margin of safety in terms of quality or in terms of price, and again, generally speaking, small caps are more of the latter.
Excellent. Guys, thanks for joining us, and members, thanks for joining us for a Melbourne edition of Stock Trek.